For consumers, we have Chapter 7 and we have Chapter 13. There's a huge difference between these. Now, when most people think of bankruptcy, what they're thinking of is Chapter 7. Because Chapter 7 is by far the most popular form of bankruptcy. I would say 75% of the bankruptcies that are filed are Chapter 7. Because if you file Chapter 7, you can eliminate forever charge cards, personal loans, doctor, hospital, medical bills, back utility bills, anything of that nature. You never make another payment for the rest of your life. Now, there's certain things you can't get rid of, by the way. IRS taxes, Commonwealth taxes, alimony and support payments, anything criminal like criminal fines, restitution, speeding tickets, parking tickets, and of course, you can't get rid of student loans. But the others, you can. And as soon as somebody files Chapter 7, the creditors are immediately stopped from all further collection activity. They are not allowed to call, bother, harass, sue, get a judgment, seize any of your assets. Everything across the board is stopped as if they never existed. And if they started a lawsuit, it's stopped. If there's a hearing scheduled, it's canceled. So that is by far the most popular form of bankruptcy. But there are some limits because you can't make too much money. We have what's called a means test. So, and it's based on the gross income over the last 6 months doubled. So if somebody is single with no children, the limit is $57,000 gross. Husband and wife with no children or single parent with one child goes up to $70,000. Family of 3 goes up to $83,000. Family of 4 goes up to $103,000. Plus, you also can't have too much in the way of assets. If you have a house, you can keep your house, provided if you're single and it's in your name only, the equity is $25,000 or less. What's equity? The fair market value minus the mortgage, home equity loan, whatever's owed on the house. If it's owned jointly, like husband and wife, then you can keep $50,000 worth of equity. Well, what do you do if you have too much equity in your house? Or if you make too much money, you're over that means test. Well, then you can file Chapter 13, which will give you a lot of relief, not as much as a 7, but if somebody files Chapter 13, all these bills and debts are consolidated into one lump sum. Charge cards, personal loans, doctor hospital bills, back utility bills, and they're frozen. Every creditor must participate in this consolidation. It's mandatory. They don't get to vote on it. They don't get to opt out of it. They have no say in the matter. And the minute you file, it freezes the amount owed. Nobody's allowed to add any more interest, penalty, finance charges, over the limit fees, late fees. That alone is a huge savings because the average creditor is charging at least 20% interest. And some of them, like the store cards, are charging 28, 29%. Then in many cases, you can pay back less than the full amount that's owed. We take your net income, subtract your living expenses, see what you can afford to pay. Another reason to file Chapter 13 is, let's say you have a house and your mortgage is behind. You've fallen behind on your mortgage. The mortgage company will not work with you. They're threatening, or they've started to foreclose. They're threatening to have a sheriff's sale, take your house away. If you file Chapter 13, you can keep your house, stop the foreclosure, stop the sheriff's sale, and you can have 5 years to bring the mortgage up to date. Let's say you owe back taxes on your house. Maybe your house is paid for. Maybe you have the kind of mortgage where you have to pay the taxes yourself and you fall behind and don't pay a few years of county taxes, school taxes, township taxes, and they're going to have a tax sale, a sheriff's sale, take your house away, sell it for back taxes. If you file Chapter 13, you can stop the sheriff's sale, stop the tax sale, and you can keep your house, and you can have 5 years to pay those back taxes over time. So Chapter 13 is very, very valuable in cases where you can't file Chapter 7 because you make too much money, you have too much in the way of assets, or you have debts that can't be eliminated in Chapter 7. If you file Chapter 7, you can't get rid of your mortgage arrearages, you can't get rid of back real estate taxes, but those can be paid back over time, 5 years, in a Chapter 13. Questions? Give us a call, 412-391-8000. 24 hours a day, 7 days a week. We would love to talk to you. Thank you.